Steve Leisman is standing by with breaking economic data. Steve, you got a second to think about it. Now you don't.
I am thinking about it. I'm waiting for it to appear online here. I don't quite have it yet. There it is. 4.9%. That's against a consensus of 4.7%, Joe. With the the Dow Jones consensus, it was 4.3 for Reuters. I don't have any details right in front of me. Now I've got some details here. Let's see. 4.9. The deflator was 3.5. It's a percentage point higher than the consensus had expected. Waiting to see here consumer spending here, which was expected to be the thing that really drove all of this. But I am interested as well, Joe, in the issue of how much business spending came along here, because if it was just the consumer, that's one thing. It's business spending that drives the economy over time. Here we go. I've got the report in front of me. Third quarter GDP 2023. Let's see if I can find the table here. Joe, I don't have the data. It's kind of trickling over. I'm going to throw it back to you. It's a beat on the upside. We had seen a lot of forecasts out there for 5%, and I'll be digging in to see what the consumer did, see what business did. But you do have that inflation inside it, which was a percentage point higher than expected. Joe?
Steve, just historically, you get the first look. If this is going to be the highest print in a while, let's say, would the second and third look at the third quarter, would it be lower than this? You have confidence this holds up at 4.9? What's this historically? I
don't, Joe. The average, the standard deviation on this is about a percentage point. On average, it's plus or minus 1.3 percentage points by the time they get around to truing this up 5 years from now. I think it's safe to say that the number is going to be higher than potential. It's a strong number. It's stronger than when we started estimating this quarter. But yeah, you're right. It is going to be revised again and again and again over the next several years, just because of the difficulty of counting a $21 trillion economy.
Hey, Steve, just to add to that, the U.S. jobless claims number up 10,000 to 210K. The week before, the October 14th week, jobless claims revised to 200K. Any quick thoughts on that?
Again, it's not ticking up. Apparently, I think we went through this one time. Those who are on strike do not get jobless claims, but if other factories were laid off because of that, or the company laid off workers, those would be people who would be eligible for jobless claims. I am getting a little more data here. Consumer spending, 4%. The price index, ex-food, energy, and housing was plus 1.8%. So that's about half of what it was the prior quarter. So that's good news right there on inflation. And again, I do not seem to see the business spending number, but that's something I'm going to be looking for. One other thing, the ECB this morning came out at 8:15, kind of signaled, I guess you could read it as something of an extended hold in policy. What they said in their statement is that the current level of rates should help them make progress towards their goal of bringing down inflation to their target. They hadn't used that language before. It suggests that they may be on hold for a bit of the ECB, which has, up until this meeting, hiked 10 times in a row, Joe.
All right.